All right, everybody, it's me, Gregory Mannarino. This is my newest segment of Markets A Look Ahead, and it's going to be a big this coming week and moving forward. So I have a lot of things I want to cover with you so we could kind of get our bearings straight. And we have an idea, again, of what's coming and how to play it. That's what it's all about. We are not going to be taken advantage of. We are not going to be fleeced. Sadly, most people are going to be decimated in the not-so-distant future, and it's unfolding right now, and we need to talk about that too. Let's start off with this. Correction. I stand corrected, and I want to thank all of you for pointing this out, because I always urge you to do your own homework, and if I say something that's not right, you call me out. And I did say something that was not right, and I did get called out for it. And I do appreciate it, and I mean it. Yesterday, I defended the president, saying that he did not order companies to leave China. I was 100% wrong. My read on it was that he was suggesting that they find another avenue or place to manufacture goods, but that's not the case. The president said, "I hereby order." Those are the words. I got this completely wrong. I understand that. And, okay. Anyway, so with that said, thank you. Yeah. And if you want to see this tweet, you can go to my Facebook page, my Twitter feed. It's right there. I hereby order. I personally was... I don't even know the word here. I guess this is to be expected. I'm going to be honest with you. I think the president, unfortunately, and I went over this yesterday at length, is under a lot of pressure. It's probably too much for him at this point. And I think he needs to start finding people that he can put around him, that he could kind of lean on and get real support from with regard to what's going on. I mean, he's relying on Peter Navarro, the guy, I'm not even going to go on about this guy anymore. He seems to be running the entire show with regard to what's going on with the Federal Reserve. He's the one. Peter Navarro is the guy that is calling for dramatic rate cuts, believing it's going to fix the situation. Peter Navarro is the guy calling for massive debt expansion, and the president is just parroting it. This is wrong. We cannot inflate our way out of this. It's an incredible thing. And I think this is weighing on the president, hence his off the Richter scale tweet storm yesterday. We need to talk about that too, because that's going to be a major market driver moving into next week, the president's Twitter feed, and a few other things. All right, so again, correction. I hope I outlined this for you. Thank you for calling me out on this. I appreciate it. I was wrong. Now let's talk about this. I didn't get to cover it too much yesterday because the video was kind of long. We witnessed yesterday a massive dynamic shift in this market. Now, understand how this played out yesterday. Let me outline this for you. The market right now was already pricing in a series of rate cuts, was already pricing in quantitative easing, dollar devaluation, massive debt expansion. So hence, after Yellowstone spoke, stocks were going up. They were going higher. And then all of a sudden, the president decides to go off the deep end in his Twitter feed, and stocks got slammed off of that. And why? It's very clear to me as a market guy. Loss of confidence, a clear vote of no confidence in what the president was obviously saying. Because if he were tweeting anything that the market liked, it would have gone up. I mean, it's a no-brainer, and I got beat up for that too. "Oh, Greg, this is not a no-confidence vote for the president. You don't know what you're talking about." Oh, really? Okay, so let's see. The president tweets, stocks plunge. If the president would have tweeted and stocks went up, what would you say it was then? I guarantee you those same people that's saying, "Oh, Greg, you're wrong, it wasn't a no-confidence vote," would say, "Oh, look at the confidence that the market has in the president." I mean, really, these are these kinds of people. And let me tell you this real quick before I move forward. There are so many people that do not believe we are in a trade war. You cannot believe that. People were trying to call me out yesterday on this. So again, I got called out for trying to defend the president, and rightly so. I was wrong. The president did say, I hereby order. All right. People are trying to call me out, saying that we are not in a trade war. And, here's the deal. Larry Kudlow, another one of the president's inner circle who has got some kind of mental defect, he said, we're not in a trade war. This is not a trade war. We're just trying to correct imbalances. So, look, that's one perspective, and there's a lot of people that are siding with Larry Kudlow. As bizarre as that sounds, this guy, Larry Kudlow, just so you know, right up until the meltdown, as a matter of fact, as the last meltdown was occurring, Larry Kudlow was saying, oh no, this is fine. Our economy is strong, the consumer is strong. The same things we're hearing now, right out of Kudlow's mouth, were coming out of his mouth then. You don't believe me? Look it up. Those of you especially who are saying that I'm wrong and this is not a trade war, explain to me. No, better yet. Explain to all of us here how Larry Kudlow is correct and this is not a trade war. The president called whatever the hell his name is, his enemy yesterday. An enemy. Interesting perspective. Anyway, so look. So the dynamics of this market took a major shift. This market was going to go up. The president, no confidence vote. Don't argue it. Don't even try. Because if you try to argue it again, I'm going to laugh in your face. This was a no confidence vote by the market. But again, there are that faction out there. You know who they are. And they are gone. Anyway, so if the president would have kept his mouth shut, stocks would have ended higher yesterday, in my opinion. The fact that confidence has now been rattled in this market, when confidence is lost, all right, because that's the only factor that drives this market. Nothing matters. Forward guidance, PE ratios, and nothing. Earnings don't matter. It's all about confidence that it's going to function. It's about confidence that easy money is going to be poured into this market. It's about confidence that a series of rate cuts are coming. That's the only thing keeping this market up. Because the debt market is screaming as loud as you can possibly imagine that there is big trouble in the world. Not just here in the United States. The debt market is reflecting the debt crisis that we are in, that most people are in absolute denial. As a matter of fact, the people out here, including Peter Navarro, including Larry Kudlow, and I would imagine the president, because he's parroting Navarro, who's brain dead, we can establish that, I think, here in this video blog, and those YouTube channels out here, and there are multiple, who I believe sincerely, and I actually do have some proof of this, that are being paid to produce. They are being paid to produce. So I want you to be very careful of who you're listening to out here. I will not name names because that will leave me open to legal action. Okay? But I think you can figure out who they are. All right? It's not that hard. But the fact that these channels, the president, Navarro, are saying the president is correct in calling for mass debt expansion because that's going to fix the situation we are in, that should tell you something. You cannot grow out of it. It's impossible. So the fact now that confidence has been lost in this market, it's going to be very hard to get it back. Very hard to get it back. Now, I could pretty much guarantee you that the president has been sat down and spoken to about lay off the Twitter feed. Look what happened yesterday in this market. And I outlined this for you yesterday. I want you to ponder this, and I want you to really think about what I'm going to tell you. Stranger things have happened in life, and the event that pops this bubble that we are in, and it's the biggest bubble in the history of mankind, I'm referring to the debt market that's already flashing, I mean it's screaming red, can come from the most obscure places. The president himself has the potential, because there's no one more powerful than the president of the United States with regard to driving this market. None, period. Even more powerful than the Federal Reserve with what comes out of his mouth. The president's power cannot be underestimated. That's why we need a stable person in there. You understand? The president needs help. He needs to surround himself with people that are going to give him good advice. He needs to kick Navarro right in the, not just in his rear end, but somewhere else too, and get him out of his inner circle. With regard to Larry Kudlow, he's another one that needs to be thrown out of this administration so fast that whatever hair he has left should just fall out too. It's an incredible situation that we are in. I think if the president were to surround himself with people that can think, people that can understand that we cannot continue down the path of mass debt expansion, which is coming. The president spoke about it yesterday, even again, and I'm going to cover that in a second. I know this is getting long, but bear with me here. If the president were able to do this, we could turn this all around. It really would. And I'll tell you something else. Despite all the rhetoric, if the president would decide to come clean, to turn this all around, I would support him again. I might even vote for him. That's the truth. As of right now, he has lost my vote in a big way, and he won't turn this around. I don't think he's capable at this time, unfortunately, because he's under too much pressure. He's under too much pressure at this point, and it's being reflected in his action. And for those of you who said, Greg is practicing medicine without a license, really? I practiced medicine for 20 years, yeah. And I still do have a license, so I don't want to hear that. It's too asinine. It really is. When you live my life, when you practice medicine for 20 years and you understand human behavior, you study psychology, then you tell me I'm wrong. Until that point, shut your pie hole, because you're just brain dead, and that's as far as I'm going to tell you right here. It makes me laugh, and I am laughing at you. All right, so anyway, let's move forward here with regard to this market. The massive dynamic shift, and without confidence being reinstated into this market, I can't see a way that we are going to hit new record highs. Like I explained to you what's happening. We were on target beyond any doubt to hit new record highs in this market. The promise of easy money, the promise of rate cuts, terrible for our economy. Great for the stock market. Currency devaluation, debt expansion. This is what the market wants to hear. The market doesn't care about you. To the market, you are a piece of excrement to be stepped on and squashed. That's all it is. It's all about pushing cash into the stock market and forcing the middle class to subsidize it. We all know this. If you follow this blog, you could not be more clear. So, with that said, without a restoration of confidence in this market, it's going to be difficult, if not impossible, for the market to regain its upward momentum. Now, we found out that yesterday, right after I did my video blog, President Trump hit back to China, increasing tariffs. Now, let me explain this to you. Do you believe, and I want you to think about it, that China did not anticipate this move? Of course China anticipated this move. Now, let me put another perspective on that for you. The day before yesterday, when China hit us with a barrage of tariffs, Larry Kudlow was saying, trade talks are going well, more are planned. The president's been saying this since time immemorial. This move by China was not anticipated by this administration. They did not see it coming, so you get the knee-jerk reaction, hit back right away. Big mistake, in my view. The president should have let this settle out, sit back, and reevaluate his strategy moving forward, but he didn't. He acted like an infantile entity because of the bad advice he's getting, and the knee-jerk reaction hit back immediately. It was the wrong thing to do at this point. And again, the president's initial plan would have already gotten us a trade deal. The market would have taken a hit, and our stock market would be higher today if he would have implemented that, but he didn't. He chose to keep the stock market propped up. You cannot win a trade war without casualties. The market must suffer. So, with that said, what does that tell you about the markets moving forward? We have a loss of confidence. We got a knee-jerk reaction to punish China further, which is the right thing to do. But the knee-jerk was the timing of this was just absurd, in my opinion. He should have left China hanging. Because China knew this was going to happen. Anyone with a functioning brain realized yesterday when China did that the president was immediately going to react. Again, it's a knee-jerk, very, very simple, like a myotactic reflex. Very simple. It doesn't even require a synapse to trigger in the brain. How many of you actually know that? You go for the knee-jerk test and the knee pops out. When that signal is triggered by hitting the patella tendon, that it doesn't even go to the brain. It synapses in the spinal cord and goes right back down. Doesn't even go to the brain. If you don't believe me, from a guy who practiced medicine for 20 years, maybe you should look that up too. All right. It's too much, right? Anyway, so with that said, I want to cover the last piece here. Currency wars. It's being covered and it's being called currency intervention. President Trump mentioned this yesterday. Now, what does that sound like to you? United States currency intervention. We already understand. Look, if you do not believe what I'm telling you, I'm going to ask you to call me out. Just like those of you that called me out with regard to my error when I tried to defend the president. All right, I was wrong. Call me out on this one. How many of you remember the president saying that he does not like a strong dollar because it reduces the United States competitiveness around the world? And he is right. A stronger dollar makes it harder for multinational corporations to compete. But the last thing you want to do here, because the world, everyone's doing the same thing at the same time, is, again, join the party. You don't want to join a party that's going to destroy the middle class here. Currency intervention, currency devaluation, it's not going to help you. It's going to hurt the middle class, who's going to pull back on spending, and that's going to have the reverse effect that the president wants from weakening the dollar. Doesn't that make sense to you? I mean, it's like cause and effect. Cause and effect, kind of like the knee jerk. You got it? So simple. So the calls for currency intervention are about to get louder. The fact that China has devalued their currency, the fact that other central banks around the world are going deeper into the negative means those that know no other way are going to follow suit. And these are Peter Navarro, Larry Kudlow, and then unfortunately sucking the President of the United States down that rat hole and sucking us all down the stinking rat hole of mass debt acquisition, which is unbelievable, and we cannot grow our way out no matter how much the Fed cuts the federal funds rate. It's not going to stop the longer end of the curve from dropping. I'll show you again so you have a visual. Are you ready? Yield curve is inverted. Right now we have the federal funds rate in the 30-year. Okay, let's go nuts here. A 1% cut like the president's calling for will do nothing. Maybe we'll go here, we'll get flat, I don't know. But let's go crazy. Let's say the president cuts 5%. Oh, you're going to cut 5%, Federal Reserve? Boy, I hate your guts. We cut 5%. Nothing is going to stop the long end of the curve from dropping. Then we go inverted again. President starts screaming, I hate the Federal Reserve. They better cut again. Now we go down 10%. Now we're all deeper in the red, and the banks start siphoning your cash. Then you keep putting in. Don't you believe that this is the plan? Oh my God. People, wake up! I can't believe that there are people that are so brain dead, and the YouTube blogs pushing the narrative. Oh, the president's got it right. We got to cut rates. We got to go negative. We got to expand the debt. We got to devalue the currency because it's going to help you. They're being paid to say it. And they're being paid to mislead you. Unsubscribe from these imbeciles. And call them out too. You know who they are. All right, look, I think I've made this a little interesting, and I think I've covered things that are true. If I have said anything that's not true, please call me out. Let me know. My email box lit up like a Christmas tree. You had to see it. And I was like, oh man, I did get that. Then I did a little research on myself. I saw it being covered on Fox News. Yeah, they covered it too. Hereby order. They can't cover it up anymore. And I know that's their job. It wasn't just covered on MSNBC, CNN. I didn't even watch these channels, I'll be honest with you. But even those that support the president, they had a guest on Fox who was like, it's kind of an interesting thing, and they actually put the light on the fact that the president has no power to order this. He is not a king. He is not an emperor. Anyway, with that said, people, please share this video. Get it out there. And I mean this again. I love all of you. We got to band together here. Anyway, I'll see you Monday. What'd you think of this video? Did it suck? Or was it decent? Please, I would really appreciate a thumbs up if you think I got it right. If you think I got it wrong, give me a thumbs down too. All right? Love all of you. See you Monday.